Today's rapid fire question is, how do lenders make money? Hey everybody, my name is Choe. I am a broker owner located out of the DC metro area, and we are licensed in 15 states. Now this question on how do lenders make money or earn their revenue, I think is a great question because, we typically know what a realtor is earning. They're earning 2.5% based off the purchase price, and the seller is paying for that for the listing agent as well as the buying agent. But then from a loan perspective, I feel like there's so much murkiness and it feels a little bit hidden. And I think there should be clarity around it because of the fact that we should all kind of know, like, how much are you generating off of this? Sometimes it's going to be a hefty margin, let's say 3.5%, 4.5% off of the loan. And then sometimes it's going to be even less than 2% off of the loan amount. But typically, there are two ways that a lender or a mortgage broker is going to be generating their revenue. Number one is going to be baked into the rate itself. So you could think about it as there's a rate where there's absolutely no points involved and no one is generating any revenue. And then you add on top the lender's profit margin on top of it. Let's say it's 2%, and that's going to increase the rate to absorb that profit margin. And you would be getting that as your what we call par rate. So no points or no lender credit involved in it. And then I'm not talking about loan level pricing adjustments where that's going to be impacting on, your own personal situation of your credit scores and a variety of other factors, which I think you can check out, the 9 criterias in this video right here. But typically that's number one, it's baked into the rate. Number two is going to be that you're going to be coming out of pocket to pay for their compensation. So that's going to be what we call typically in the industry borrower paid compensation or origination fee. Now, this is not points. This is typically going to be, depending on the structure of that company, it's going to be paying for that loan officer's compensation. Or the reason why it's going to be a borrower paid compensation instead of being baked into the rate is because, let's say you want the absolute lowest rate possible. You don't mind paying for the loan officer or the company's broker compensation if they are a mortgage broker, and then you want that lower rate and you're going to receive probably some lender credit to offset that closing cost. So those are going to be the two ways. One is baked into the rate, where in the industry we call lender paid compensation, and number two is going to be borrower paid compensation, where the client is going to be paying for either the loan officer's compensation or the company's compensation if they are a mortgage broker. Now, I did talk about something similar right here on why you can't get the absolute lowest rate available because of these situations. So I recommend checking that video out. Hope you enjoyed this video. If you did, please like, subscribe, and then comment below if there's any questions that you have for me. Thanks. Talk to you later. Bye.